We are just getting started. Many of you may feel like we just crossed the finish line with this Bitcoin ETF, and this is the top. You haven't seen anything yet. We're going to play this interview by Brian Kelly. I think it gives you a glimpse at how traditional finance is looking at this asset class as they just begin to dip their toes in the pond here for integrating crypto assets in their investment portfolios, integrating blockchain technology into traditional financial systems. BlackRock's serious about that, tokenizing the world, using blockchain as they try to ETF everything in this dystopian future they have for us. But, he's going to talk about a couple really key themes. First of all, the effect of the halving, the effect of Fed policy, this higher for longer, what that will do to crypto demand and price, and further the next step. What's next? Yeah, you can buy Bitcoin direct. You can buy Bitcoin ETFs. Where are they going to go? And spoiler alert, it's into the broader crypto market. And of course, right now, his focus as an institutional investor or analyst is Ethereum, Solana. Those are the hot names and two of the biggest blockchains for sure. But there'll be a time when XRP's in the mix or Cardano or, this is going to expand broadly and it's going to incorporate most of your main crypto assets. So let's play this interview. I think it's an eye-opener for those that don't understand. This really is the beginning.
Halving effect is going to dissipate. If you talk about how many dollars into the market this is, you're talking about last week it was about $60 million a day of sell pressure. That's now cut in half to $30 million a day. But you're talking about a $1 trillion market, so it's very, very small. So I think if anything, it's going to be the psychological impact of it and the fact that we're all saying, hey, look at this 4-year cycle that we have out there. Probably what's more important, though, is when you get to see some of these bigger brokerage firms come online. So Morgan Stanley, UBS, once they are online and they can have their customers start coming into Bitcoin, that's a lot of pent-up demand.
And what he's saying here, they can buy, of course, Bitcoin ETFs directly, but those brokerages can't allocate, clients' funds to that asset class yet. They will be. That's coming in short order. So not only do we have this new tool available that makes it easier for people to gain access for investment purposes to this asset class, but it's just starting to ramp up in terms of options for investment advisors to allocate. It's going to not be everything of their client's portfolio, but a percentage, 1%, 2%, 3%, something like that, depending on how aggressive they want to be. And that is just starting to ramp up, even though the Bitcoin ETF is now live.
What the ETFs? How does that change the game now? Because last halving, we didn't have ETFs.
That's right. And I think actually it changes tremendously. That's why Morgan Stanley and UBS are so important, because up to this point, they have not been able to buy those ETFs. Their clients haven't been able to buy it. So if you think about it, you now has an asset with the most demand it's ever going to have, right? You've got all these people just able to come on, and supply has been cut. Coins on exchange are down, so you're having a whole bunch of pent-up and potential demand hitting lower supply. To me, that's the bullish setup for Bitcoin.
We had a segment on earlier where we were talking about gold. Do you think Bitcoin will ever be a safe haven type asset?
I think eventually it could be, but I think we're talking 10 to 20 years down the road.
Okay.
I mean, it is still in the early stages of acceleration here.
What kind of impact does that have on the price of Bitcoin?
So it's had a positive impact until the last weekend, frankly, right? So Bitcoin was correlated very highly with gold. Anytime you'd have a geopolitical hiccup, you'd see Bitcoin catch a bid. Although over the weekend, when we saw the Israel-Iran attacks, we saw Bitcoin dump. And I think it's kind of trying to figure out what its personality is and as it gets more ingrained into the financial system and there's more different type of traders, it's going to start to get correlated to other markets.
And I would say this, it definitely is a hedge against geopolitical risk. Yeah, there might be turmoil and you see prices react negatively, but this is why we're all getting into crypto. Limited supply, a token that can't be debased. You can print US dollars to infinity. You could have irresponsible fiscal policy. This gives us an out to sound money, to money where code is law, where we know the rules of the game before we play. We don't know what the government is going to do from one day to the next. They'll rush in and usher out huge spending packages to all sorts of countries all over the place. That ain't going to happen with cryptocurrencies. Plus, you are not tied down to any one region. These are global in reach. So as this grows, as this becomes more commonplace, you're going to see these currencies probably become much more stable because, again, it's almost like owning the S&P 500 that gives you coverage of the whole U.S. economy. Well, this gives you coverage of the whole globe and the value flows, and you're not so tied to a singular region or a singular fiscal policy. Very, very important. Even if you see, a correlation where problems break out in geopolitics and you see a short-term negative dive, that doesn't mean it isn't a hedge long-term against all of these issues.
It's interesting. It's great to have you on. My best to Brian Kelly, by the way. But I would have thought it's traded extraordinarily well. But as the amount of Fed rate cuts continues to come down, and maybe they're getting religion, should it be trading better or should it be trading worse? That's really what I'm trying to struggle with here. I mean, you can make an argument either way.
You could make an argument about it. I'll give you my argument on this. I think the Fed has told us that they're going to tolerate higher levels of inflation to reduce the debt to GDP. What does that mean? That means that your buying power in your currency is going to go down. So your groceries are going up. You're just not going to have as much buying power. So to me, even if the Fed says, hey, as long as the Fed says we're not going to raise rates to 10% and really crush inflation, I think Bitcoin does well in the two scenarios that we're talking about, an even Fed or Fed rate cuts.
Beeks, what are some other...
And what's important here is the Fed hasn't really stated they're going to, tolerate higher inflation. They said we're going to be aggressive, we're going to stand firm, but you notice they're not continuing to raise rates, even though, inflation is still out of control. We know that. We look at these Cook government reports. Yeah, all is well, everything's great. We live in the real world. We understand what's going on. And if they were serious about going after inflation and having sound fiscal policy, they would continue to raise. You would have to. Otherwise, you will never really stamp down inflation. We understand that. The fact that they are paused and likely ain't going to raise it any higher just tells you they're going to tolerate more inflation. It's going to reduce the value of your currency, and so more people are going to try to flee their dollars. You can only stuff so much money in real estate, so much money in stocks. Those values are also inflated. People are going to look at somewhere else, another alternative, where to put their investment capital. Cryptocurrencies, these are early day assets. Their values are relatively low compared to where they can go, and it's going to be a great opportunity. And I think we will see people use it for that reason, because we understand, we can read between the lines. The Fed's going to be okay with higher inflation, hopefully not to cause too much damage out there. If they were to raise rates more, it would be turmoil everywhere. They ain't going to do that.
Ways that, some folks, I mean, now that these Bitcoin spot ETFs, that you can get that sort of exposure, you can buy it in an IRA if you want to, that sort of thing. What are some other ways that you're thinking about playing this? If you do take that 10 to 20 year view that it's going to be this ecosystem that's created, other than the ETF, other than buying Bitcoin straight out, what are some other things that, viewers should look at?
Yeah, so I would look at some of the other coins. So that would be Ethereum. Ethereum and Solana are probably the two that you could buy this cycle, because those are going to be the ones that the new financial system's built on top of. So decentralized finance, heard about DeFi. Those are the two that are really in the lead for building that. You could also look towards the miners on that as well. Although the mining's a rough business. I mean, there's a lot of capital expenditure. You have to worry about electricity, but that's another way to kind of play the ecosystem.
This is what I would say about that. We know Ethereum is next on deck. It will be the next ETF. I'm not a huge fan of Solana. I know a lot of people out there love it. Nothing against it. Top crypto chain, of course. But it's not just going to be those two. There's a lot of fantastic crypto assets out there. More of them will become more mainstream over time, and we will see more ETFs, more allocation from big-time investors throughout the broader crypto space. And it's just kind of the way this game typically works. Usually Bitcoin brings you into cryptocurrencies as the gateway, and then you start allocating across your altcoins, depending on your risk appetite, how far down that list you want to go. So it's just a matter of time. Understand that. Start positioning now for those premium cryptos are going to be next on deck. Whether that's a year, 2 years, maybe 3 years, who knows? But you're going to start seeing an avalanche here because, they're not going to concede the rest of this market. When you look at BlackRock, Fidelity, they're just not going to do that. They're going to want access to all of it. Again, your major stuff. I'm not saying they're going to list Coin 6000, of course, but all the ones people are going to practically want to invest in, and there'll be significant long-term demand they want in that. And also investors, man, they're going to want that potential upside you get from investing in altcoins. That's why we invest in altcoins. Whether you believe in a certain utility or something will be important, we know there's more upside potential. Otherwise, we would just invest in Bitcoin and call it a day. Your big time investors are going to be no different, just on a different scale. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.